Well, there's little economic news out this week. The little bit that we did have was pretty good. Productivity was the most striking number at a growth of 1.6% in the second quarter. That is reported quarterly productivity numbers. 1.6 was better than the 1.3 that was expected, and that was much better than the first quarter. Okay, so productivity is important. What really struck me, though, that labor costs also increased 1.7% in the second quarter. It's expected to be up only 0.7%, and it was 1.7. You put those two together, and it tells you that productivity was a lot higher than 1.6 because labor costs pulls down the productivity number, and it shot up a full percentage point more than expected. What does that mean? Well, it means that our productivity really increased dramatically in the first quarter, and when we have that kind of increase, our products, are more competitive around the world. Our exports should do better. Our imports, are not going to be as destructive to our GDP growth because our exports and our productivity is going up, and our exports are going to be less costly. That's all good news. That was a big striking number that was out this week for last quarter. Trade gap is also narrowed 10.7%, meaning exports versus imports. What that's going to do is going to make the GDP number bigger. GDP, gross domestic product, our growth, is going to look a bit bigger because our imports drag down our GDP, exports increase it. So all that is tied together. I thought that was a pretty good number. And then the jobless claims came in 6,000 less than it was last week. But on a week-to-week basis, that doesn't mean a lot. But it's okay. So interesting enough, it looks like we're getting the first hints of the slowdown that we had in the second quarter is stopping. In other words, our slowdown is probably finished. Now, it may not necessarily go up, but the slowdown's finished. What does it mean for stock prices? Well, we're in the middle of August, or not even the middle of August yet. August, September are not really good months for the stock market. I don't think it means a lot. We're going to have bad news coming out of Europe. Despite what Draga said about they're going to save the euro. Well, I think they are going to save the euro, but it's not going to be easy. And there's going to be bad news along the way. There will be. Our economy probably will still continue to struggle like it is. I might want to keep a close eye on China and see if they're going to be able to re-accelerate their economy because they're being affected by Europe just like everybody else. They are being affected more so than we are because it's a big export destination for them. And it's a bigger part of their export than us to Europe. So it doesn't affect us as much. Anyways, I think it's time to still stay fairly cautious, still be defensive. But there's going to be a time when you're going to want to switch from defensive to aggressive, but just not yet.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.